Hello, fellow traders. 'Tis I, the Rumpled One. It is Thursday, January the 10th, the year 2019. Let's talk trading, distraction. Let's see, yesterday I talked about attention, about paying attention and paying attention to what you pay attention to. Well, the flip side of that is distraction. What are the things that are distracting you? But you know what's really interesting? I come up with these topics, and then usually the same day or the next day, I get a bunch of emails on the same topic from a lot of different places. And I just find that I don't know if it's serendipity or what, but I just find it really interesting because I read something yesterday after I made the video on attention, and the writer was saying you have to plan for distractions. And then another writer was saying how I think it was you can focus optimally for something like up to 90 minutes, and then you need to take a rest of about 7 to 20 minutes. Otherwise, you're going to lose your focus. So I was thinking on that about, yeah, I should do the video on distraction. And then, of course, there's the whole thing about the habits. Number one, you have to replace a habit that doesn't work so well with one that works better. And then the whole thing about setting up your environment so it makes it easy for you to do the new habit versus, slip back into the old habit. So distraction. I mean, take a pause, and if you're where you trade while you watch this video, how many distractions do you have? Do you have more than one computer? Do you have more than one screen? Do you have the radio going? Do you have a TV going? I mean, do you have things on the wall? Do you have books open, files open, letters, envelopes? I mean, just how many distractions do you have? And on your chart, I mean, I talked about attention. I mean, do you have things on your chart that are distracting you from what's important? I mean, when you boil it down, um, as I've said numerous times, trading is simple. For the most part, trading is binary, up, down, buy, sell, profit, loss, um, short, buy. Um, it's pretty binary, but people like to make things complicated. All those squiggly lines are nothing more than price derivations. Price was an input. And so, um, that's why I like to look at price, and sometimes I guess people think I'm beating a dead horse, but, it's something that works, and I apply it, differently. And throughout the years, once I realized that, it was time to throw away the squigglies and focus on the horizontal lines and focus on what's real and what everybody can agree on, as opposed to what's conceptual and what everybody likes to debate over. It just made it so much easier. In fact, I just read an email from a trader out there that was thanking me because this trader said something that they'd spent, thousands of dollars and was paying all these fees, and they hardly ever had two winning trades in a row. And then he stumbled across, my videos and things I did, and he started employing the price action screen, and he says, he hardly loses anymore. He says it's just, and I told him, I said, well, and I've said this before, it'd be really hard for me to charge hundreds of thousands of dollars, for a seminar. And people, the traders would come in, they'd sit down, I'd hand out a one-page sheet. I would explain the method. It would take me about 15 minutes, the length of a video. And then I'd say any questions. And then everybody would be mad and demand their money back and call me a scam artist and a ripoff. On the other hand, if I had like a 6-inch binder filled with all these charts with squiggly lines and all these esoteric formulas and indicators, everybody would be scratching their head by the end of the day or 2 days. They'd go away with this huge binder thinking that if they just study this stuff long enough, they'll finally get it. And they each one of them would be thousands of dollars poorer, and I'd be thousands of dollars richer. So, so that's why I don't go around and do these seminars, because it's, people wouldn't pay for something that works. They want to pay for something that looks interesting, and you know looks like it's the answer. But anyway, once again, those are all distractions. So what you want to do is minimize the distraction. But hey, you're human, so sooner or later you're going to get tired, you're going to get distracted. So plan for it. Have your alarm say, hey, I've been trading hard for the past hour and a half or 2 hours, so it's time to take a break before I make a mistake. And maybe you go for a walk, or maybe you just, close your eyes, take a nap, just whatever you do, just to recharge your battery so you can get back to it. And especially, you want to make sure that when you come back, you have your money and risk management in place, because you don't want to be distracted so you forget about your money and risk management. So let's see, we've got the yearly line here. Let's switch over to H4. You can see, normally, let's see, I was looking at a trade here. Let me put things back to euro yen just to be consistent. You can see the euro yen is getting close to that yearly open. So what I want to play is the if price crosses that yearly open, and we'll play to the upside from there. Yeah, there was lots of pips to be made here, but for this, we're going to look for these yearly open crosses. And also right now, we can see prices 44 pips off the weekly high. And we still have two pairs that haven't filled the gap. And chances are they won't. But I just want to show you something, because I looked at dollar Canadian the other day. And you can see here, it missed filling that gap right here by about 4 pips, I think. We had a 96. Let's see, we had a high of 87, 96. So we missed by about 9 pips, filling that gap right there. But you can see if you took the open and you went long, there's still a chance to exit with a profit. And right here, if you're looking at the screen, as you see price exiting that wick zone, you bought in the open, you should have taken your profit knowing price exited the wick zone. So if you didn't, that's on you. Don't blame the method. You have to know when to take profit, using some not so common trading sense. And you can see here, we popped out of the first day of the week right here yesterday. You see price banged its head on it a couple of times. Maybe the next time, 124.79, we might get a little break to the upside there. And looking at the yearly open, you can see here price has definitely moved off of it. And usually, if price is within 5 pips of the open, then we'll get the threshold and in this case, since this is high to close, if it's within 20, because that would be a rat zone, a yearly rat zone trade. And I think that could prove to be highly profitable if you catch a nice reverse with the rat zone off a yearly high or low. And it was the other thing. Well, give me a chance here. I'll mention it. Somebody was saying that they realized with the buy zone that once after looking at the statistics, they looked at the ADR's average daily range, and they realized it said the light bulb went on. It hit them like a ton of bricks that, yeah, price has to do that range expansion to get to the average. So if it hasn't already hit the average and prices above the open but close to it, if I go long, I'm going to win. And then on the other hand, if price is below the open and it hasn't hit that range, done that range expansion to hit close to that ADR, price is going to keep going down till it hits that ADR. So if I sell short, I can have a winning trade. And they just, they're like, wow, it really is simple. And I don't share names because, unless a trader says, hey, yeah, go ahead and mention me by name in your video or something or post it. Because, some people, it's their business. It's personal. It was from them to me. So I want to respect, each and every trader's privacy, unless they want to, if they post out in an open forum, that's kind of different. But if they send me a private message or a phone call or an email, that's personal. So I just want you guys to know that I will respect your privacy. And so right here, you can see we're still between that day one high for the year. But remember, that was quite a range. So it's definitely going to oscillate between here and here for a while. But once it breaks, who knows what could happen. But on the other hand, it could stay between here for the entire year. We'll just have to wait and see, right? Okay, inside bar. On the daily, let's see, we had the Frank a couple of days ago. We looked at that, so now we're back into that inside bar range. New Zealand CAD, we're in that one too. And that happened 3 days ago. And you see there was another inside bar right there. Okay, let's look at something different here. Pretty much all the same. And then the euro had an inside bar in the month. I think we showed that right here. Yesterday was a nice breakout of the monthly inside bar, and you can see the profit to be had. So, as always, these simple horizontal line trades show that they can be very profitable. And we look at the range here. Euro yen clocking in at 71, but we have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 pairs, 100 or more pips on the daily range. So that's when we talk about, once again, looking at the buy zone. You can see here the distance from the daily open, where price is right now, close the daily open. You can see here we've got some in that buy zone area, or the daily open cross. We can take that too. Weekly holos, highest open, lowest opens on the hours and the days. You can see what's happening here off that daily lowest open, which also in the daily and weekly happen to be H1 highest open, happen to be the same, just put in a new high for the highest open for the week there. Buy zone, I changed this screen, closed the open, closed the pivot point, and closed the VWAP. Now, remember, VWAP really is a squiggly line, but I like to show just the latest VWAP level, so because that's what you'd be trading for. You wouldn't be trading for the VWAP where it was back there. That would be ridiculous. Rat zone, you can see where we are there. Rat zone's definitely on. The pivot. We close that pivot for today. And fellow traders, I'm about out of time. So just remember, plan for distractions, because they will happen. You're human. But I also want you to plan for Remembering it's not what you trade, it's how you trade it.